Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are analyzing two articles. The first article is titled Palantir Technologies, Right Place, Right Time, and we're going to be discussing why their share price has surged by 221.8% and whether or not some investors should start to take profits right now before an inevitable pullback. We're also going to be going over a little bit of a bearish article because overall on this channel we've been very bullish and positive on this company, but I think this bearish author did a rather good job explaining the risks that the company is facing at their current price point. So as an informed investor, you need to be aware of both the bullish positive case for this company as well as the bearish negative case. And the title of that article is Palantir is Too Expensive, Avoid Until Growth Rates Expand. And again, I thought this was a rather fair article, and I really want you to be aware of this so you can make an informed investment decision. With all of that being said, don't forget to go and annihilate that like button right now, subscribe if you are new, let me know down below in the comments if you want more videos on Palantir Technologies, and also feel free to comment other stocks that you would like me to review. Don't forget to also become a member of this channel for as little as 99 cents per month, because that's what keeps me right here on YouTube so I can continuously analyze stocks just for you. And with all of that being said, I say let's jump right into today's stories. Palantir Technologies, as you already probably know, is a big data analytics company which serves both commercial enterprises as well as government agencies, and this company specializes in artificial intelligence as well as machine learning. Right now, Palantir's PLTR stock finds itself uniquely positioned in the stock market right now, being at the perfect place at the perfect time, which has helped their customers navigate the increasingly complex geopolitical turmoil that we are experiencing around the world right now, as well as avoid risk, and they do this through their artificial intelligence platforms, which allows upper management to make data-driven decisions. Also, this company has very strong financials, and they have a growing client base, which is setting the stage for further expansion for this company, and they also have an amazing upcoming catalyst, such as them joining the S&P 500 index, which is going to be phenomenal. Once they do join the S&P 500, which I think they will, it's only a matter of time, money will start to flood into this stock, because when investors buy the S&P 500 index or any ETF that tracks this index, some money will flow into Palantir because Palantir will be a part of that overall index, which should increase the share price. You should also know that the company is up around 221.8% year to date, and as you can see on screen, from this point right here, the share price has absolutely exploded. But with that being said, we as investors need to practice proper risk management so we don't get burned when this company pulls back before their next rally. But before we get into that, let's talk about their recent results. We have seen very impressive expansion over in their commercial contracts as well as them growing their commercial demand, which is phenomenal. As of quarter 3, Palantir Technologies has posted robust growth in both of their overall segments, meaning their commercial segment as well as their government agency segment, and this is truly setting the stage for continuous growth and success for this company over the long term. Their revenue soared by an impressive 17% year over year, up to $558 million for the quarter. Palantir software also continues to impress the general market, considering the humongous amount of money that companies are willing to spend on Palantir's technology, and this is what I mean by that. Revenue from its top 20 customers rose by 13% year over year, which is fantastic because it means that their most valuable customers like this company so much that they want more. So they are willing to spend more money with this company, which strengthens their relationship together. And right now, Palantir is bringing in an impressive $54 million per customer in their trailing 12 months in regards to this, which is extremely good news for investors. We also see very strong growth in their US customer count as this company continues to expand in the United States, particularly the United States concerning commercial enterprises. Palantir has been unwavering in their commercial business, and this is due to their Foundry platform, which as a result has caused the company to acquire new customers, and with their artificial intelligence platform named AIP, this is also going to add to their commercial prowess, which is expanding very rapidly, while also finding more opportunities to infiltrate this commercial commercial market. I personally have had a long-standing prediction for the past 2 years now that their commercial business is the key to this company. Their commercial business will eventually outpace the amount of revenues that are coming in from their government business, and once this happens, it is going to be phenomenal. They are treating their government business as their steady income stream, which is more reliable than their commercial segment, because the government is going to be spending money whether or not the economy is in a recession. Now, on the other hand, commercial clients are going to be more volatile, but the overall market opportunity in the commercial segment is also a lot bigger, so it's amazing to see Palantir gaining momentum in this particular segment. We also know that they have been improving their profitability, which is fantastic. With Palantir growing their overall revenues, their margins are also improving, which is reflecting very positively in their overall profits. In fact, quarter 3 marked their 4th consecutive positive GAAP net income, which has positioned the company to be eligible for inclusion in the prestigious S&P 500 index. And like we said earlier, once this happens, their share price will gradually increase just because they are a part of the S&P 500. Now, this begs the question, is Palantir a buying opportunity? Well, it really depends. Let's see what analysts, Wall Street experts, and professionals, as well as stock reporters, have to say about this company. As far as Wall Street is concerned, Palantir has a hold consensus, meaning that you should not buy or sell this company right now. You should just hold a core position to see what this company will make of themselves in the future. Now, overall, this company has 3 buy ratings, 5 hold ratings, and 5 sell ratings assigned in the past 3 months for this company, with their average price target being around $15, which is around a 24.81% downside from their current share price of around $20.40. The article also goes on to highlight a very accurate analyst over from Raymond James, who has an average return of 72.37% per rating and a 100% success rating. However, let me criticize this really quickly. Yes, this is a 5-star analyst and he's very successful, but he really only has 7 ratings generating profits, so he hasn't done a lot of ratings in this regard. I honestly think that an investor and an analyst such as Daniel Ives is a superior analyst in this regard. And if you don't know, Daniel Ives is a very prestigious analyst from Wedbush who analyzes Palantir Technologies as well as Tesla. And so far, he has been very accurate in regards to both of these companies. However, don't go off of just what analysts say, because analysts' overall guidance should only be used as a guide rail and not necessarily what the company's stock price should actually be worth. So please always make sure to take these analysts' predictions with a grain of salt. Now, we also see that other institutions such as Zacks Rank has actually given Palantir a strong buying opportunity, which is surprising because they used to say that Palantir was a holding opportunity and they just skipped buying opportunity and went right to a strong buying opportunity. The strong buying opportunity, or rank number 1, is literally one of the strongest ratings Zacks could give a company. And overall, the companies that they rank as number 1 do very well comparatively to the S&P 500 and other stocks within their own segment. So again, this is good to see how another institution is rooting for Palantir Technologies, which is going to bring more investors into this company. But now let's talk about this bearish article, which again I found rather fair, and I think that you should be aware of this. Before we get into this, let me tell you my strategy. I've been holding Palantir ever since their DPO at around $10 per share, and I've taken a little bit of profits off the top after every single surge in their share price. And by doing this, I have not only lowered my risk, but I've also been able to take these profits and reinvest them back into this company or a safe asset such as a mutual fund, an index fund, or an ETF. And then when this company's share price inevitably pulls back, which happens periodically for this stock, I have reinvested some of that money and waited for the next uptrend, made more money, took profits at the top, the company dropped in their share price a few months later, I rebuy back into the company where I am making profits hand over fist for this company. Now, don't hear what I'm not saying. I am still holding a core position in this company that I don't touch, because I want to hold this company for the long term. I'm really only taking a fourth of my position and liquidating it for profits after they surge. And right now may be an ideal time to do just that. Palantir has literally become one of the best investments during 2023. And that's because their share price, like we said earlier, has surged by 220% year to date. So if you've been following my channel, I really hope you took advantage of this. But now we need to practice proper risk management and preferably take some profits off the top, because you don't want to be stuck holding the bag for this company. We're also going to be going over some fair value share price estimates and what your average cost basis should be for this company if you want to hold a core position to hold for the long term, just like what I'm doing. But make sure to do your own research and always do what you think is best for your portfolio. I'm just trying to be honest and transparent to tell you what I'm doing. So now let's get into the bearish negative part of this article. He says, after this immense surge, does Palantir's growth rate equal this overall stock momentum? Can they actually support their valuation right now? And his simple answer is no. Especially considering that he thinks that a bear market is approaching and that the company will almost certainly participate in a downward slide over the coming months. According to his estimation, he says that hot money traders and novice investors who are easily excited have piled into Palantir during 2023 to push the valuation to where we see the company's share price right now. And it's only a matter of time before this house of cards comes crashing down, which is why he rates this company as a sell rating or to avoid this stock for the time being. Now, let me agree with him here. I actually agree with him that there are plenty of novice investors in the stock market right now that have no idea how to properly invest. They don't understand market cycles, they haven't done honest due diligence, and they are jumping in and out of stocks on a whim. However, I do want to say that there is an underlying market of very prestigious investors that hold Palantir Technologies, so I think this criticism doesn't go as far as he thinks it does. We should also be aware of their overall valuation problem, and let me agree with him again. I do think, according to current metrics, that Palantir is overvalued. And as investors, we need to weigh both the risk and reward for each stock. And let me quote straight from the article because I think he does a good job explaining this, where he says, and I quote, "At a $20+ share price, the total equity capitalization of Palantir is $43 billion. The good news is the balance sheet is very strong, with nearly $3.3 billion held at the end of September versus $922 million in total liabilities. However, revenues for this year are projected at just $2.2 billion, with $520 million in non-GAAP cash earnings. Meanwhile, analysts projected business growth rates around 20% annually for 2024 to 2025 would be nicely above average versus other US firms, although not incredible," end quote. So essentially, he's saying that although the company is worth right now on a market capitalization basis at $43 billion, they're only bringing in $2.2 billion, and they're not bringing in a lot of profits compared to their overall valuation. And honestly, I'm not going to argue with the numbers. He is right here. The company's current metrics do not justify their current valuation, whether in profits or in their overall revenue. However, this is when we need to pay attention. If we discount their valuation according to their growth metrics over the next 10 years, then the company becomes much more digestible, and it shows that it is a very impressive investment if you plan to hold this company for the long term. The author goes on to say how overvalued Palantir is compared to their overall big data analytics peers, with a 1-year forward PE at almost 70 times, which is a rich valuation that we would not want this company at. Ideally, we would want it to be more digestible at around maybe 30 to 50, the lower the better in this regard, and this would help if their share price was lower, which would help their overall accounting metrics. On screen right here, you can see how Palantir compares regarding their forward PE ratio to other similar companies such as Adobe, Microsoft, Datadog, Autodesk, Intuit, Salesforce, SAP or SAP, IBM, Oracle, and many others. You can see from this overall chart that Palantir is trading at almost 70 times, which is leagues above everybody else except Datadog. And this is not a good look for Palantir Technologies. Ideally, we would want to snag this company at a cheaper share price rather than invest into this company close to all-time highs. Again, don't hear what I'm not saying. This company is phenomenal, but let's not be greedy here. Let's take some profits off the top because it's trading very high right now and then reinvest back into this company. Even if we look at Seeking Alpha's computer ranking system, they currently give Palantir an F valuation rating, and this is based off of their overall sector averages regarding their fundamental ratios and accounting ratios, and if you look on screen here, you can see what all of those are. They rank D and F in a lot of things except their non-GAAP forward PEG ratio or PEG ratio, which is B+. However, I've done a couple videos talking about their PEG ratio and why I absolutely love their PEG ratio because it discounts their non-GAAP non-GAAP earnings based upon their future growth, because that's what this company is. We're basing this company's success off of their future growth. So when this stock author says the company is overvalued according to current metrics, I 100% agree with him. That is exactly right. But when we discount their current valuation based upon what they will achieve, or rather could achieve in the future, this company becomes a much better investment opportunity once we put that into perspective, considering that this is indeed a growth stock, meaning that we're not going to value this company based off of current metrics, but rather their growth in the future. So investors who are contemplating to add Palantir Technologies to their portfolios, you do need to think long and hard regarding the current premium that this company is trading at. Clearly right now is not a good investment opportunity because the company is not giving you much right now. It's trading at all-time highs. Now, it's great for investors who are already in this company, but honestly, holding is what I'm going to do because I've just taken some more profits off the top. This author reiterates his sell rating for this company, but for me, I am not going to give Palantir a sell rating. That's absolutely ridiculous, and I do think this author is wrong on a couple of things. For instance, he even says, could I be wrong? He says, of course, and I agree, of course you could be wrong, because if their operating results end up spiking beyond current projections, we could see around a $25 to $30 share price over the next 12 months, well into 2024. Another very realistic scenario is that Palantir could potentially be acquired by a much larger company such as Microsoft, Oracle, or IBM. Now, I don't think Microsoft would buy Palantir, considering that they have already heavily invested into other artificial intelligence companies, but it is rather realistic to think that Oracle or IBM could buy this company. But clearly, they're not going to buy this company at such a high share price right now. So unfortunately, buying shares of Palantir's PLTR stock right now of around $20 is not the best buying opportunity for investors. Holding this company and waiting for a better entry point into this company by having a small position under $18, a moderate position between $15 and $16, or an aggressive position under $14 would be your best bet. Ideally, you would want your average cost basis to be around $14 per share, and that would be ideal for a long-term holding position for this company. Now, if your position is higher than that, again, you would want to lower your position and have a smaller position the higher your average cost is for this company. And this also depends on how long you plan to hold this company. In the end, I do think Palantir Technologies is trading at a rather high price point, and a pullback in this company's share price is inevitable eventually. It could go even higher in the short term, but again, we would want to be risk-averse investors and play this smart, especially if you're going to hold this company for the long term, such as what I'm advocating for. To summarize, Palantir Technologies is a phenomenal company. Their current valuation is detached from their overall underlying growth metrics, but this company is so strong that if you're planning to hold this company for the long term, it may not even matter much. We also can look forward to the S&P 500 inclusion, which is a phenomenal catalyst, as well as more major contracts and them continuously scaling their commercial revenues and commercial clients. With all of that being said, I would love to hear your thoughts down below. Don't forget to go and annihilate that like button right now. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents per month. And with all of that being said, I will see you in the next YT video.